HBAR price is at a breaking point, not because of sudden momentum, but because of what's happening beneath the surface. After months of grinding lower, the asset is now testing a critical technical structure that could either spark a recovery or accelerate the decline. Traders aren't watching price alone, they're watching whether a falling wedge pattern holds and what that means for the next major move. Right now, HBAR trades near 0.0916, down 2.64% over the past 24 hours, but the real story isn't the dip. It's the battle forming around key support. Analysts are split. One camp sees a potential reversal building, while the other warns the recovery lacks conviction. The outcome hinges on a narrow band between 0.088 and 0.09. Hold that, and the path opens towards 0.103. Lose it, and the next stop could be 0.078. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The focus has shifted to the HBAR falling wedge visible on the 2-day chart. This pattern typically emerges after prolonged downtrends and often precedes reversals if buyers step in decisively. Technical analyst Butterfly highlighted this structure, noting that HBAR has repeatedly bounced from the 0.088 to 0.09 zone during recent pullbacks. That repeated defense is what's drawing attention. It suggests accumulating interest at these levels. If the price stabilizes above this support, it could validate the falling wedge breakout and encourage buyers to re-enter. But it's not just about price. The Relative Strength Index, a momentum gauge, sits at 36.45 over 7 days, weak, but not yet oversold. That means sellers still have influence, yet there's room for bullish momentum to build if confidence returns. The HBAR resistance level at 0.103 is now the next major target. A move toward that zone would mark a significant shift in sentiment, especially after the prolonged weakness since March and April. The leading scenario still allows for a slight extension upward, but only if support holds. The yellow trend line on the chart, often used to mark recovery channels, aligns with that 0.103 level, adding technical weight to the resistance. This is where HBAR technical analysis becomes more than just chart lines. It's about market psychology and liquidity. The 0.087 level is the swing low. If broken, it could trigger automated selling or stop-loss orders, accelerating the drop towards 0.078. That's not speculation, it's mechanics. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. On the flip side, holding above 0.088 gives bulls room to maneuver. The HBAR consolidation phase could turn into a launchpad if volume increases and momentum builds. But volume is currently thin, and that's a red flag. Without strong participation, even a breakout towards 0.103 might not hold. The bigger picture, HBAR price recovery depends on more than charts. It depends on whether the broader market stabilizes, whether institutional interest returns, and whether the network's utility gains traction. But right now, the immediate test is technical. The HBAR resistance breakout isn't imminent, it's conditional. And the HBAR support zone is the fulcrum. If it holds, the path to 20 cents remains a long-term possibility. If it breaks, that dream fades fast. The next signal to watch is clear. Can HBAR defend 0.088? Everything else flows from that.